And now we'll be moving on to our first plenary of today, Decarbonising Thailand, Sustainable Finance Pathways to Green Growth. Moderating this discussion is Radhika Lal, SDG Finance Policy Advisor and Team Lead for UNDP Asia and the Pacific. If I could invite Radhika to please take the stage. And joining her on stage are our distinguished speakers. May I please invite you to join her on stage. Dr. Onsaran Pom Manuarmon, Senior Financial Sector Specialist at World Bank. Chow Wong Yen, Chief Sustainability Officer at United Overseas Bank Thai PCL. And last but not least, Sarani Achawanuntukal, Director of Climate Finance Network Thailand and Managing Director of Sal Forest. Radhika, I'll pass the time over to you.
Thank you very much. I think we're going to start with an engagement with the audience, right? So you need to take out your phones again. So while we're waiting for the responses to come up, just to say a note of appreciation both to EcoBusiness and UNEP for organizing this, and to all of you for being here. This panel is going to focus on decarbonisation, mitigation, which was talked about as being easier, but I think we'll see there's still significant work to do in terms of really accelerating progress, and so that a lot of our interventions are not just nice to have, but good business. And with the multi-stakeholder panel here, we're going to go into a lot of those challenges, those issues, and understand what's working and where we need to support Thailand to do more in terms of accelerating and meeting its own objectives. Since we're running a bit late, maybe we'll turn to our panel and get your thoughts on what you think is the most important. Can I start with you, Kun Pom? I'm going to use first name so as not to tangle myself up with pronunciation.
Thank you, Radhika, and good afternoon, everyone. Thank you for having me from the World Bank to join this conversation. I think since our panel today focused around the issue of sustainable finance, I would like to kickstart our discussion by perhaps providing an overview of where we are in terms of sustainable finance development in Thailand. So as we all know, right, Thailand has a huge investment needs, both in terms of decarbonization, but also I want to emphasize on the adaptation side as well. We need to definitely scale up investments to address both challenges. The good news is that if you look globally, climate finance is actually available, right? If you follow the climate finance tracking globally from sources such as Climate Policy Landscape, they reported that between 2009 to 2010, there was around $632 billion available climate finance, but that number has recently doubled because of huge scaled up in investment in things like renewable energies. However, Thailand hasn't been tapping too well just yet into that global part of climate finance, right? Despite having made some good progress in the foundation of a sustainable finance ecosystem in Thailand. If you look at where we are today in terms of our ecosystem, we can say that we have laid out some pretty good foundation. For example, we have quite supportive policy direction for sustainable finance. We have launched sustainable finance initiatives at the national level. We have launched the first taxonomy, which is a traffic light taxonomy that could be a basis for green and transition finance going forward. And you may wonder, how do we benchmark against other countries globally in terms of sustainable finance? The answer is that we actually quite in line with the average global development. Recently, the Sustainable Banking and Finance Network, which is the network supported by the IFC, our sister organization, have conducted a global benchmarking of sustainable finance progress globally. And this benchmarking is looking at 3 pillars. First, it's called ESG integration. This pillar looks at how financial institution integrates ESG factors into their project level decision making. The second pillar, they look at climate and nature related risk management over the long-term period. For example, do you adopt TCFD framework in your operation strategy? And the third pillar is given 1 and 2, do you actually put actual money into green projects, right? Across these 3 pillars, we come out as quite as a middle. We are rated at in implementation stage, along with other around 60% of the countries around the world. But the pillar that we are doing better on the first 2 pillars, which means we have put frameworks in place. But the third pillar on whether money is actually flowing into green projects, we still need to do much more. And in this pillar, if we were to look at what would be the enabling factors going forward, right? The World Bank has also done some research on this. And in our research, we have produced a report called Unleashing Sustainable Finance in Southeast Asia. I think 3 or 4 factors came out pretty clearly. Yeah. The first one is data. Second one is better definition of green, which is being addressed in taxonomy. Third is human capital in the field. But the last one, and quite interestingly, is that we need more green projects, a pipeline of bankable green projects ready to be financed.
Thank you very much for laying out and providing us with that overview. Let me turn to you, Kun Wang.
Yeah.
Where do you see the emphasis from UOB's perspective?
Okay. Good afternoon, everyone. My name is Wong Yuan. I'm the Chief Sustainability Officer for UOB Thailand. So to answer Radhika's question directly, I think the greatest challenge we see, what we really need is the acceleration of the deployment of climate solutions, right? And this whole unlocking capital concept, it's part of the acceleration process. So to get there, what we really need right now is actually open collaboration. And why do I say that? The enablers are already there, right? If you look at what drives corporate action, and if you look at the external drivers, you have the regulators. Regulators are coming in with the Climate Change Act next year. We are the second country that has the carbon tax within the region. It's already signaling to the market, hey, this is coming. And we have the listing rules, listing requirements. So all these are in place. Now, the other external drivers are, for example, the large corporates requiring RSPOs for their procurement processes and things like that. One very successful area we have seen, it's the MNCs coming in. So, recently Thailand has been talking a lot about building a data center hub within this country. And we have your AWS coming in to say, look, for us to operate here, we need 100% clean energy. So with that, there are changes within the new power development plans. There are things that government is also looking at and to cater towards this clean energy demand by these large MNCs. So Thailand in itself, wanting to maintain that inbound investments, will need to react accordingly to all this. So the enablers are there. And then you have the large corporates with large commitments that are putting in place requirements for their suppliers to start taking action as well. So the challenge really, it's not so much on getting the awareness to the market, it's really bringing along your whole ecosystem of your suppliers, your partners, and everyone else together in this journey, and then accelerate that deployment. In terms of finance, I think right now we are about 1 trillion, we have about 1 trillion worth of sustainable finance. This is in baht, not in US dollars, right? So 1 trillion baht in sustainable finance. We need about 5.5 by 2030 to meet our 2030 goals. So we need to accelerate in the next 5 years.
Thank you. Turning to you, Kun Sarani.
Thank you. Ka. So first, I'd like to thank EcoBusiness and for having me here. And thank you, Radhika, for the question. I was actually rooting for government policy over there, just so that if it really gets really big and so financiers don't have to do anything, we just go, ask for government policy. But actually, I think that's true. So I'm going to talk a little bit about this because this is a challenge that we have in Thailand. And I think I really appreciate what Kun Pam has said about the situation that we've kind of, in a way, we are beyond the starting point already. So we have started. So we're now, what do you call, in the implementation stage, right? So I would say that just based on, so South Forest is a member of a coalition called Fair Finance Thailand Coalition. So we've been campaigning for sustainable banking for the past 7 years. And we're coming out in the next, I think, hopefully less than 2 months, a case study on the TCFD reports of Thai banks. So there are quite a lot of Thai banks right now that try to, account for the climate risk and then to come up with net zero plan, transition plan, and so on. But 6 banks we identified have issued specific TCFD reports, right? So we also had a chance to interview 5 of the 6 banks on what the challenges were for them in doing this report, right? So I think that really dovetails with what the audience was saying about government policy, because really the one thing that all banks said is we need more supportive and clear government policy. Like, for example, one big challenge they identified is that as you all know, for the banks, a most significant emission is basically their financed emission, right? That's scope 3. And so how do banks know, what the emissions are? They have to ask the clients, right? Or come up with some reasonable proxies. And so they say that it's really difficult for them to really gauge whether, some clients don't have that data at all. And for the clients that report data, how do we know if, it's comparable or, if the standard is good enough? So I think this one needs a lot clearer definitions and standard. So I think in that sense, if Thailand, but I think this is going to happen anyway. For example, if we look around the region, Singapore, for example, already announced that next year, so fiscal year 2025, right, you're going to have mandatory carbon accounting for the listed companies. So they're going to start with scope 1 and scope 2 based on the IFRS standard issued by the ISSB, right? And then for fiscal year 2026, the year after that, it's going to be scope 3 reporting. So I think that's a very clear signal that's going to help, this kind of thing will help the banks tremendously in verifying the data and also to implement and design their so-called transition plans away from fossil. Because I think this is one difficulty is that we're not talking about the need to have more green investments, right? Yes, that's important, but at the same time, we need to shift financing from brown to green as well, right? So the more incentive and the more signals you can create to make people shift. So the banks, that means really slowly moving away from fossil financing towards more green financing, right? So I think so data plus, supportive government policy is going to be really important. Okay, just to give you just another example. So we are starting to do what we call a climate finance tracker, just to see the extent of climate finance that's available so far in Thailand. And nobody would be surprised if I say that the most significant sectors that receive quite a lot more funding recent years is solar PV, right? Especially by companies that put on the rooftop solar on their factories and so on, and the EVs, right? But the thing is then, the more solar PVs we have, the more factories, putting rooftop solar PV. Is that going to help Thailand decarbonize, successfully in the energy sector? Maybe not. If the energy system is still basically the centralized, enhanced single buyer system, right? So supportive policy is really key to this. It doesn't really matter if you have a lot of installed capacity and willing solar players, if they cannot really sell to the grid, or they cannot do it economically, or the grid operator says that, oh, sorry guys, we have the take or pay contracts and the minimum take of the gas off takes, for example, right? So I think that it has to go hand in hand. So in other words, government policy, I would say, is crucial for unlocking capital because it would create the right kinds of economic incentives for players who really decarbonize. So just before I stop, if anyone is interested in solar financing, tomorrow CFNT, we have a launch of the second report called the role of crowdfunding for solar finance in Thailand. So if anyone is interested, please go check out our website, climatefinancethai.com. Thank you.
Thank you very much. I mean, so I think you're pointing to also some of the problems, right? So you can have too much of a good thing where you don't get enough investment in transmission lines, in battery storage, and also the business model for the energy companies. So a lot of these pieces really need to come together, and it's not just going to be, the enabling environment for finance. But let me turn to you. You spoke a lot about scope 3. Does everyone know what scope 1, 2, and 3 are? Why don't we get a response from the audience? I mean, we shouldn't take for granted, given our varied backgrounds, that we all know about this. Would anyone like to come in? Or should I ask Kun Sarani to say quickly? We don't want you to die.
No, because I spent a long time trying to understand because I have no knowledge at all in science. So essentially, I think scope 1 is what you produce, so you emit on your own, like your factories and so on, right? Scope 2 is essentially the energy that you use or you buy, and then scope 3 is kind of everything else, sort of in the value chain. So basically, the emissions of the car that your employees drive to work, things like that. And for banks, it would be financed emissions, would be what is embedded in the companies that banks lend to, more or less.
So you can see why it's so complicated.
Go ahead.
So I don't know if I need a mic, but the big thing that's happened recently with scope 3 emissions, if you follow it all, SBTI, so that's the Science-Based Targets and Initiatives, and a lot of companies. So a lot of companies said, oh, we're going to have net zero targets and we'll set up SBTI. And SBTI includes scope 3. And then, I don't know, 6 months ago, a year ago, they just realized, pardon my French, holy shit, damn it. How do we do scope 3? So to Sarani's point, scope 3 is everything, all your suppliers' energy use and the portion allocated to the production of your product. So it's a real problem. And then there was a big political backlash because SBTI said that companies could satisfy their scope 3 targets by using offsets. And then you get into this whole discussion of, oh, they're buying their way out of it. But that was sort of an interesting wake-up call for me, just seeing that happen.
Yeah, so the next question actually was going to be on scope 3, but I think we're realizing that it's actually quite complicated. So let me ask you, Kunpam, from the side of the World Bank, what are the ways in which it's incentivizing in its projects or other ways change to deal with this? And we know it's difficult because not everyone is cited on everything that goes on in their value chains. And certainly for financial institutions, it's difficult. What's the World Bank doing?
I think I can allude to the World Bank approach to support climate investment in general. And if scope 3 is part of that, it will become part of the measures supported to the project. But institutionally, the World Bank is a big investor in climate-related projects. Institutionally, we have a corporate target of using 45% of our loan should support climate objectives, and we are committed to 50% mitigation and 50% adaptation. That's corporate goal. In this agenda, we are typically working with countries through 3 modalities, 3 main ways. Of course, as a World Bank, we provide financial solutions, and this includes IFC, which could also work and provide a financial solution directly to the private sector. But I want to also emphasize the 2 other roles that the World Bank is playing. Apart from finance, we are a major knowledge partner And through knowledge, I mean conducting analytics and providing advisory services to countries in developing projects, in identify the right mix of policies. And the third one is through what we call using our convening power as a forum to bring different partners together to address climate issues. In Thailand, we have launched what we call the Sustainable Finance Platform for Thailand, which is a integrated World Bank Group approach to combine all of the things that I have described, finance, knowledge, and convening to support Thailand to scale up sustainable finance, both green, blue, and also carbon finance.
Thank you. Let me turn to you, Kunwal.
Okay, so actually in also response to Peter's comments, right? If you think about it, in the most ideal scenario, if every company declares their scope 1 and 2 emissions, which is the easy part, right? There won't be a scope 3 emissions problem because as part of the whole value chain, you got a scope 1 and scope 2 data, right? Everybody, right? So what Singapore has done, it's the scope 1 and 2 emissions disclosures required for the large listed companies. What Malaysia has in fact taken a step further and requiring the non-listed companies to have certain form of disclosures for their scope 1 and 2 by, I think, 2030. So where Thailand is at this moment, it's at, with the new Climate Change Act, I think we need to have a GHG inventory where we need to start reporting our scope 1 and 2 emissions, and certain penalties will be levied if, let's say, you do not comply. And with all that, that's when the bank can look at and then accurately measure our financed emissions, right? So financed emissions, which Kun Sarini mentioned about, it's actually the loan we lend to the company multiplied by the emissions or emissions intensity that the year-to-year emits on a year-to-year basis. So with this kind of level of disclosure, then you can see a lot more transparency in the market. So for banks and regulators have to work hand in hand together in this. And I think Thailand is on the right track. We are just not getting there yet. We need to quickly get there.
Thank you. Kun Sarani, would you like to add something? You already talked a bit about the difficulties.
Yeah, I think I have maybe just a bit to add on the scope 3. So I think one possibility is to encourage essentially large companies to work with their suppliers, like, you know, people in their supply chain more closely and giving incentives, for example. So I say this because a couple of years ago, South Forest did a report for the Ministry of Justice, essentially, and UNDP on the readiness of Thai companies for the upcoming EU's human rights. Actually, they call it the Corporate Sustainability Due Diligence, right? It's a very long law, CSDDD. And so that will affect large Thai companies that export to the EU also. And so what we said in the report is that, well, one way is because the Ministry of Justice is really worried about SMEs, right, who will may be affected by the law because they are suppliers of the bigger companies. So we say, well, if the government can provide incentive for big companies to provide support, you know, like capacity building or a kind of a buddy support to the suppliers, we think that's one way to bring everybody up. And so I think that kind of approach could be used for decarbonization as well, right? And so if, for example, you know, a big company come to the bank and say, okay, I have this program to help, you know, my tier 1 suppliers decarbonize or do carbon accounting or whatever, right? If they can get more favorable terms at the bank, for example, vis-a-vis the competitor that doesn't really care that much about the suppliers or take a more kind of policing approach. I think that's maybe one possibility we should explore. Because I think the thing is in Thailand, as already the UN resident mentioned, we have millions of SMEs. And now, and they're kind of hand to feet, you know, kind of mode right now, right? Survival instinct, you know. So is anything that we can do to assist is what we should think about, I think.
Yeah, and if I may add on, so it's not just an external driver that should be part of this whole ecosystem. What we can do is, as even financial institutions, what we can do is actually partner with these large companies that want to decarbonize their supply chain. And it's not just about availing green finance products, you know, cheaper rates and things like that. It is really partnering that group of suppliers, that level, that archetype in that value chain, and work with them like this is your priority emissions that you need to reduce. we have a tech partner that can solve this, or a group of tech partners that can solve this. The cost benefit analysis is this. This is your marginal abatement cost. Step by step, we can guide you in that decarbonisation process. And at the same time, do a sort of like a corporate general purpose loan with a sustainability linked loan KPI attached to it if certain emissions fall down. I don't think we have seen a lot of this kind of mechanism in the market yet, but it's something that financial institutions can actually partner with the like-minded corporates to start on their supply chain.
Thank you. Going to shift. I'll come back to you, Martin. So going to shift a bit now to taxonomies. Do we all know what taxonomies are? Does anyone want to come in? Because we're going to speak about them next. Maybe you can say a little bit when you come in, Kunpom. So Thailand, I mean, let me begin with ASEAN, which I think to me is the most inspiring taxonomy, both providing space for a range of different countries, but also being extraordinarily ambitious and seeing these not just as definitions of what's green and sustainable, but really linking that to transition pathways. So how do you see the Thai taxonomy, which is a voluntary taxonomy and really just in its first phase? What more can be done in terms of moving the needle, what's working, and really how do you accelerate?
Sure. But before that, what is the taxonomy, right? For those who are not familiar with this, basically a taxonomy is a common definition of green in a nutshell, because there is this big enthusiasm about scaling up green investment, etc. But without a common definition of what activities qualify for green, then you risk the problem of greenwashing and other integrity-related issues. So you see a lot of countries around the world develop taxonomies, the EU being the major case. And in Thailand, we have launched the taxonomy last year, phase 1, covering 2 sectors, energy and transport. And right now, Thailand is developing phase 2 of the taxonomy and would cover 4 more sectors, which is agriculture, manufacturing, buildings, and waste management. With all the taxonomy for these 6 sectors, then different parts of the ecosystem, banks, regulators, investors, can use taxonomy as a reference tool to determine the quality of assets that you want to channel the capital towards. And this would give confidence in the investment that we are putting in money that is aligned to sustainability objectives. And currently, our taxonomy is written in the way that is aligned to climate change mitigation goal, mostly, which is GHG emission reduction. Green activities are ones that are considered to be investment that is aligned with 1.5 degree goal. But in the Thailand taxonomy, the special feature is that we don't just classify green activities. There is this category called amber, which also help us determine what could be considered credible transition investment, right? And this is quite a interesting contribution of the taxonomy because it helped establish some timeline and trajectory on which asset that if you were to invest could be considered a credible transition. With what timeline? If you look at the taxonomy, it also introduced the concept of sunset date, which means that credible transition can't go on forever. Otherwise, your investment will stop contributing to the bigger climate goals, right? And this concept is also adopted in other taxonomies, such as ASEAN taxonomy. So the landscape is that we will have a set of taxonomy for many sectors. The next step is to move into implementation. This is the key. And to me, there are 3 main issues in implementation that we should think about. First, I would call it taxonomy awareness, just taxonomy awareness, to build common understanding of what it is. Actually, there's still a lot of misunderstanding that this is about introducing new sets of taxes, right? We have to kind of correct that misunderstanding with the public. Secondly, I would call it taxonomy competency or taxonomy literacy. Even though right now it is a voluntary tool, but to use it properly assessing criteria and map it to your activity, there needs to be probably perhaps more guidance and capacity building to the voluntary users out there, both in the corporate sector and the financial sector. And the last leg, once people understand it, know how to use it, what are going to be kind of incentives or more direction on how would we make use of it in different settings? Would we link it to green finance product? Would we link it to disclosure? For example, globally, you see the very clear application of EU taxonomy in the context of disclosure. But beyond disclosure, different countries are still thinking of different approaches to implement the taxonomies.
Great. Where do you see, what are the challenges? Where do you see the opportunities? Is it with financial institutions, disclosures? Yeah, your perspective.
Before I answer that question, and regarding that taxonomy word, right, I have to say sustainability professionals are never the most creative in coming up with names, right? You have taxonomy, you have TCFDs, you could have better names for it, right? So, yeah, so for the taxonomy in Thailand, which we launched last year, actually energy and transport covers about 70% of our GHG emissions. So on the right track, right? But how many of you have heard the taxonomy being used at this moment? It's been out for about a year. None, right? I think there are about 18 taxonomies in the world right now, about 18. Only EU, it's mandatory reporting. And without mandatory reporting, and to touch on a little bit on what Kumpom mentioned, right? Without mandatory reporting, no one can start using the taxonomy. To give an example, BOT comes to us and say, taxonomy is out, use the taxonomy to start classifying your loans as green, amber, or red. How can we look at a company and estimate what activities are there in green, amber, or red, right? And then there's also questions on that amber classification. Amber for Thailand and amber for Indonesia will have very, very different activities. For us in Thailand, we are fortunate enough to get 100% energy access for the whole population in, I think, 2021. Indonesia hasn't reached there yet. And a lot of Indonesian workers working at the mines live on paycheck to paycheck at the mines. So there are a lot of considerations when countries set taxonomies. I'm not saying what the other countries are doing in terms of classifying what is good, what is not good, but there's a reality that we need to adhere to. Can Thailand make it mandatory to align your reporting disclosures in accordance with taxonomy? Perhaps, if only the real economy comes on board. What I mean is that if, let's say, SEC, SET, or in fact the large companies within their own internal self-motivation decides to say, I will start classifying my revenues in accordance to the level of activities in the taxonomy, then that's when the banks are enabled to start classifying what loans goes towards which category. So it is a combination, and I've been talking about this a lot, it's a collaboration between the regulators, the companies, and the banks in getting the taxonomy in use, right? Challenges, really, I think it's the alignment of interest, to be fair, right?
Where do you see the challenge, the opportunity?
I think I'll just add to Kun Sho Yuan, sorry if I pronounce your name wrong, as said, is basically the importance of, so just transition, right? I guess it's a concept that's kind of still new in Thailand, but I think it's really important, right? But so just having a taxonomy in place doesn't guarantee a just transition, right? And on the contrary, it could accelerate unjust transition. Like one day if you just shut down the coal-fired power plant or the coal mines without any kind of plan in place for the workers involved in that, right? So I think that I really agree about collaboration and alignment of interest. So just transition as a concept has to be, I think, the underpinning all realistic transition plans. So taxonomy is just one tool, right? It's just one tool. It's a classification tool, so to speak. Another challenge I want to add is I think it's about monitoring and verification. Because I think that when, let's say, we compare the typical finance and with green finance, right? So a typical bond, for example, everything in the ecosystem is in place. We know who the custodians are, and then you can be sure that the banks involved will know how to escrow the funds, and they'll monitor whether the company has profits or not, right? It's all kind of embedded in the financial system. But for green bond, right? Kun Pom mentioned greenwashing, right? I mean, banks are not. I mean, I came from banking sector also. I have no idea, right, about the environment. So we need external experts or validators to tell us, whether the green bonds, after the funds are issued, is it going to be used in the green projects that the issuer claim? And even I think more complex is that those green projects, do they actually generate the outcome that we hope? Is it really the outcome? Is it really climate mitigation, or even more complicated is climate adaptation, right? Because the outcome sometimes take years and years, after the funds are raised. And so I think that element of kind of continuing monitoring and reporting is something that's going to need a lot more of collaboration, and maybe I call it like ecosystem building. That's kind of not what the mainstream finance is used to. And I think here I see opportunities for engaging civil society organizations, because they are the people on the ground. So I think that there may be ways for them to really come into the structure and then help with these kinds of work. Yeah.
So for the last round, I actually want to be a little bit more freewheeling. I think we heard that the drivers can often be very different from what policymakers think. So FDI is a huge driver. And if the investment is coming from jurisdictions which prioritize sustainability, then a lot of the work here has to, by default, prioritize that. If we look at China, a lot of its initial focus on EVs was not mitigation. It was pollution control. And it so now happens that China is the pioneer, the major player, but that it didn't come out of emissions reduction per se, but really a way to deal with pollution significantly and accelerate that. So the drivers that we need to leverage are often varied. So Malaysia, for example, doesn't have it's also voluntary, but it has targets for banks for green lending. So what's that mix of incentives across the ecosystem which can drive change? Aside from all the awareness, the capacity building, the harmonization around taxonomies, what are the main drivers? And then we turn over to the audience.
I think that the subject of how to decide financial incentives from more green investment is quite an interesting area that a lot of countries are looking at. And I feel like the jury is still out on what approaches is going to work, right? For example, I work a lot more on taxonomies, and my example that I have seen is how different countries are now thinking of how to make use of the definition of green to incentivize more green investments. For example, in Sweden, right, the green export credit guarantee is giving better terms of guarantees to activities that are aligned to the EU taxonomy, for example. In Egypt, they have come up with this green loan facility. And in China, the PBOC have come up with emission reduction facility that then bank can on-lend further to banks. But my point is that there's no silver bullet right now. Different countries are piloting different approaches. The jury is still out. And in the case of Thailand, I think that conversation also has to evolve on what approaches will fit our situation here.
Thank you.
Okay, so as a bank, and when corporates come to us and say, I want a green loan, the first thing they will ask for is, can you give us lower interest rates? And if, let's say, I want to put in green deposits, can you give me better interest rates? Because I'm doing good for the world, right? And as financial institutions, as being part of this, you all should participate as well. Now, the thing is, we do have certain financial incentives, but before I get into that, let me break down the role of banks in the economy, right? So in the nutshell, we actually take deposits to safekeep your money and then lend it out to the economy. And this whole transformation, it's actually to make, what we really need to do is to make productive use of this capital allocation. in this process of taking deposits and lending out money, there's a few transformations that are going inside, right? There's credit transformation, liquidity transformation, maturity transformation. And what I mean by that, it's how many of you are willing to put in a 25-year fixed deposit? No one, right? How many of you are willing to take a 6-month home mortgage loan? No, right? So the role of bank is to take these short-term deposits and then lend it to the market. And when you look at that whole banks in sustainability space, what we can do is to better allocate, make it a lot more productive by allocating into lower emitting projects. And for banks with net zero commitments, you will see them actively reshaping and rebalancing that portfolio. So this is where banks come in. And when you talk about financial incentives, we do have financial incentives for clients who are committed to reduce their emissions. And this is in the form of sustainability-linked loans. And if it's aligned to taxonomy, if it's aligned to certain aligned to certain eligible activities that the bank defined as green, that incentives will come in.
This is something that drives all of us mad, including a lot of the people we work with, which is, why is going green not give you a better price, right? Why isn't there a premium on bonds? Why does it depend upon supply and demand? So, and some countries are actively thinking about dual interest rates, those that prioritize green and give it the benefit that it deserves. And also looking at long-term financial institutions.
I know.
I'm going to turn now to Kunsarani.
But let me add one more thing before you go on, right? So before that, I would like to highlight also, a sustainable business doesn't mean, a business in sustainability doesn't mean it is a sustainable business. Fundamental and root to it, right? The company must be a credit-worthy company. Please.
I was going to add that point for you.
None of those things disappear.
Yeah.
The question is, you're doing something that's mitigating risks, right? For across the board. Why isn't that priced in a good way, right?
Okay. I think that your question has to do with just the reality is that we're talking about negative externality, right? And so that's why it makes it very difficult. If nature, imagine, sends us a bill and say, pay up for all the damage you've done, right? Then it would be much better, Then we don't really need to maybe talk about these different financing mechanisms and so on. But since we don't have that, we have to find proxies and we have to come close to putting a price. So I believe in, putting a price on carbon, putting a price on pollution and all those bad things, basically, right? But the tricky bit is about the transition period, which I guess the scientists tell us this period keeps getting shorter and shorter, right? So I would say, just going back to my earlier point about the importance of going from brown to green and not just more green. So in a way, it's not enough to just create incentives for more green products and green finance. It's also important to create disincentive for more brown projects. I think that's really important. And to me, that's kind of one key to unlocking capital also, right? For example, in Thailand, I'm sure everybody in the room can name at least one or two really destructive, wasteful projects. Right? So I think that's kind of that's why I think government policy is important. Also, external factors, be it demands from, maybe foreign investors or investors who buy stocks or whatever. But I think we just need to articulate this impact better. So, for example, to help banks along in their net zero or transition plan, the government or even the UN or anybody can help provide, let's say, open data of climate stress maps, water stress maps, where we can all look and factor in, like, you can talk of different scenarios of in temperature increase and see, like, at a very detailed level how Bangkok, how fast it's going to sink, or which area will be impacted. So I think that these kinds of things is helpful. It's helpful for everybody from SMEs to the big companies to the banks also, because this is not something that's easily accessible. So I've been reading up on a lot of very interesting initiatives, by usually like big foreign companies on how they develop their climate strategy, right? And a lot of that really is based on having data, and very kind of reasonable scenarios that sometimes they buy it very expensively from whatever satellite companies or something, right? So I think that those kinds of things, will go into creating the right data, the right sense of what climate risk really means, and that will help create the disincentive, I think, for brown projects.
No, I think you're absolutely right. I mean, in some places in the US, just making available that climate risk data, especially for real estate, just means in the short term, maybe people know that they don't invest in a certain place or build in a certain place. Just getting a quick check with the organizers. I know we were running late and we've probably made people late for the next session. Do we have time for one quick round of questions? Yeah? Okay. So do we have a mic that we can?
You said earlier on, Martin Wensky-Stalling from JFCCT Sustainable Development Committee, International Chambers of Commerce, for example. So you said earlier about the SMEs and Scope 3, and that's actually where a lot of the Scope 3 is in the supply chain. This is why it's so hard. And I like Tsarini's, you alluded a little bit to social justice, because we often focus on the E in our ESG thinking. But when you think about the current practices, the reality is that you, as a big company with your supply chain, you cannot just tell the supply chain to do the same thing that you're doing in your modern factory. You need to allow for, the practices, the labor, the reality there. So the S is actually becoming the social of the ESG framework becomes quite important when you want to implement and work with your supply chain. So that's what the comment I wanted to make. But my question was, when we're talking about finance here, and earlier on I heard a little bit about finance is available, Thailand is not tapping into it. But I hear from the other side of people that are looking at or working in clean tech and environmental startups, and some of them are already going somewhere. So they're not longer startups, but they're sort of SM medium kind of businesses maybe. They're saying so there are some things that are easy, like solar or something that are known. But then there is a whole universe of solutions that we need. I don't believe in all of them, but there's a lot of solutions we need to put money behind, some of them at least. They can't get the money, right? I mean, I know not all commercial banks are the same. Some banks are actually taking different approaches to what you just said and actually more leaning towards green investment. But just generally in the whole ecosystem, it still seems to be that getting finance into climate solutions, into projects is hard. And if it's not the kind of mainstream kind of known stuff. Could you comment on that maybe? Why is it still hard?
So let's just take a couple of more questions and then maybe get one or two people to just respond, not the whole panel. Yeah.
Thank you. My name is Ray Schonfeld. My company is Panfos. We're in solar energy. I'd like to be even more provocative than the last fellow who asked a question, and ask all members of the panel to say that despite all the very interesting intellectual arguments that you've given on how to deal with this and what needs to be done, the performance of Thailand in renewable energy specifically is pathetic and almost disastrous. The IEA has screamed, we need more private finance in that. The United Nations Secretary General also. Now, I'm not going to try and answer that question of why and what needs to be done. Do you even accept that something needs to be done urgently to raise the activity in renewable energy in Thailand? Or do you say, are you going to be like a lot of people in the Thai government? They're saying, well, we've got a good net zero plan for 2065. You know, I looked around this audience. There's probably one person in this room who will still be working in 2065. Most of us will be dead. Now, you know, it's not serious, this discussion. I think. Well, but so do you? But you have to accept first that the performance of Thailand needs to be improved radically.
Maybe one more question.
Thank you. So I'm Aparna, and I work with Carbon Farm, which interestingly, not in energy, but we work in sustainable agriculture and most importantly, rice. And what we're trying to do is channelize carbon finance to small and medium enterprises to make them more self-reliant and get access to more funding when they change to more sustainable practices. And my question is very similar to Martin's question. One of my daily struggles is I meet lots of small and medium enterprises a lot in Thailand itself who are rice traders, rice farmers. And despite such impressive goals in climate change finance, one of the biggest problems is how do we directly finance these smaller sector private players so that they can incentivize themselves and start doing more sustainable ways of production. It's very easy to finance larger projects. Say, you know, the World Bank will fund larger projects. The UN will make very big investments in very large-scale projects. But sometimes what you need is more smaller money directed to many different smaller players, say in Thailand. And that challenge, I've been struggling with this for 2 years, and it's almost impossible to get, say, one rice trader, even $100,000 to start some of these projects. So how do you see the taxonomy aspect there, and how do you see the role of local banks or like international banks, private sector banks in this phase as well?
First, I have to agree, Thailand is the most conservative when it comes to our net zero goals, especially when the technology is available, when the cost benefit makes sense already right now. And installing a few solar panels here and there is not going to move the needle. And again, it really boils down to policies, right? Certain targets have been announced. Whether it's going to be met, we still don't know. But one thing that we've commonly heard from the ground is that the government has just approved a new LNG terminal that's going to be, you know, servicing energy for X amount of people. So you have all these conversations around certain decisions made, be it from the previous regimes or previous contracts and things like that. But things are locked in. So when things are locked in, to reverse them is going to be very difficult. But what we can do is to make sure the additional requirements, the additional investments go towards the right direction. So ourselves, UOB, we have already committed to net zero. Power sector is actually one of our key areas that we are looking at. We also urge the other financial institutions to go along that same path, to look into your power portfolio, for example, like what Kun Sarini mentioned, moving away the loans towards certain brown sectors by having this net zero commitment around power sector. I totally agree that we can do a lot more. And that really involves collaboration, not just across sectors, but within the financial institutions as well. There are banks that have big oil and gas loan portfolios that perhaps don't even know where to start. Not because they are unwilling to, they do not know where to start. And we need the large corporates to work with us, right? And to answer the smallholder question, right? The smallholder farmers question. If you take a look at banks, they have different credit risk profile. Some can lend to farmers because that's their business model. Some cannot. But those that can lend to smallholder farmers, probably just a small little amount of their balance sheet. So how do we activate this whole ecosystem to enable the money to go into the stakeholders? We are working on a project. I cannot name who, but this particular company, it's aligning themselves with a large US retailer. The large US retailer will name this product a green product with certain LCA computations inside and all that, and they will have a premium to that product. This premium to the product, this manufacturer has agreed to pass this premium down to the smallholder farmers for their decarbonisation efforts, right? So How the bank comes into support is that these smallholder farmers cannot use that money to invest upfront capex for their solar panels and whatever other technologies, correct? So the banks can come in to finance like a ESCO model, a PPA model, where we lend them the money and then we ring fence the proceeds from the large retailers all the way down to the manufacturers and then to us. For the credit risk profile, which we cannot finance, we will work together with a smaller agricultural bank that has that kind of credit appetite, that has that kind of outreach to that to the farmers, and that's when we ring fence the whole thing. And of course, we will have IFC, World Bank, ADB to come in to support with certain technical assistance, certain capacity building. So it is an ecosystem project. I've been driving this concept of collaboration in many conferences. It is something that we really need to look into it, not just across sectors.
Thank you. Can I turn to you, Kun Sarani?
So I'll try to be hopeful, although I think the questions are really sad. First, to Kun Martin, I think that banks in general in Thailand are conservative. And I believe they have been conservative partly because of the crisis, 97 crisis. So I'm all for more competition and all that, right? But I think this is the nature of Thai banks right now. So one solution, and I think this may apply to the smallholders in agriculture as well, is to take more advantage of the de-risking mechanisms of the multilateral DFIs, like what Kun Pom just mentioned. At COP29, I think it's a little bit disappointing because the developing countries were saying we need 1.3 trillion, right, US a year, and what the agreement was like 300 billion, but it's still better than 100 billion, right? So there's some increase in the commitments, and I think that the multilateral DFIs know that now they have to deliver, right? And I think they have to find ways to streamline the process and also make the ticket size smaller as well. Because I think I heard from even some of my friends at even big banks that say, well, it's very difficult to get accreditation, from like the green climate funds and things like that. So I think that there needs to be more streamlining and more accessible mechanisms for the de-risking bit, so that it can help those startups and also the smaller companies. Because if you cannot make the project itself like bankable in the minds of existing banks, right, what you can do is just try to bring in de-risking mechanisms and structure some kind of blended finance with different organizations. So I think it goes back to this point about collaboration, but I think just closer collaboration. To the gentleman who asked about renewable energy, I agree, is very depressing. I've written and spoken quite extensively about how sad the country is in terms of, I think, even an energy regulator doesn't appear to be independent, unfortunately. And so I'm not sure how we can actually get out of this problem. But one possibility is maybe for us and businessmen in the room to speak up, louder about the cost of this to your business, right? And how this direction is costing Thailand's competitiveness. I think this is something we can all do. Because, for example, the more we are locked into the fossil gas, if we increase fossil gas, at the same time we want to meet our so-called NDC, what we need to do, of course, is to invest in things like expensive CCS, right, to bring down the carbon. And that's very expensive. But we may not have to care if, again, in the centralized system, whoever believes that they can pass on most of or all of the costs to the consumers, right? And so I think that at the end of the day, I don't think we can get out of this short of a really, really genuine energy reform. Also, the reform of the governance system. But yeah, competitiveness, I would say, would be one card, and it's actually reality anyway that we need to speak up a lot about. Okay.
Thank you. To conclude, I want to make 3 points to respond to the question. First, on renewable energy, I also agree that Thailand can do much more to scale up renewable energy and making use of green finance that is available, develop more projects in this regard. And I think this is an issue that's recognized like in every forum on CBAM, on green finance, on taxonomy. I think it's recognized that we can do much more in this regard. But second point I want to make is that, but we also need to look for other green investment opportunities in other sectors as well, right? If you look at where green climate finance in Thailand has gone into, is energy and transport mostly. But if you look at ASEAN in general, other countries have used green finance for other sectors, such as green buildings, for example. This is such an untapped investment opportunity, not to mention other sectors that would be covered under the phase 2 of Thailand taxonomy, like green manufacturing, green agriculture, waste management, for example. We also need to tap into those. And lastly, on SMEs, I think this is also an issue that came up in every forum when we talk about sustainable finance. It's the bottleneck that we would not be able to transition justly if we can't involve the SMEs. I think the key is to look for the keyword to work with SME. One of the approaches is to find better aggregator, right? You need to reach them through more effective aggregator, both in terms of finance guarantees, or help them aggregate their investment, package them better to sell it to carbon markets, for example. The key is to use the aggregator approach to reach the SME more effectively. That is one of the approaches we can do.
I just want to thank the panel and just maybe conclude with a few points. I think we've heard of the importance of collaboration across the ecosystem, right? It's not just different institutions coming together. It's really finding those pain points, those challenges that need to be dealt with. I think the second we heard is really a mix of different types of regulatory and financial incentives to really get that acceleration across the system. On aggregation, I think one thing that I just wanted to add to supplement, I mean, in addition to what Kun Wang mentioned, the way the banks can pass or help to de-risk down the chain, with IFC and the other ones being further up, is also to think about associations of farmers themselves pooling I think an ADB and others are looking at aggregation, which involves lending to associations rather than to individual farmers. So really thinking about different types of aggregation across the line. But I think we can all agree none of our countries is on track, Thailand included. And a lot more can be done through this mix of incentives, collaboration, but really setting up a coalition of the willing. Thanks very much again to all the panelists and to the organizers and to you, our audience, for a wonderful panel. Thank you again.
Thank you.